Hello everybody. Today we will talk about a tricky subject. What if the US collapses? What you should do before, during, and after a collapse to protect yourself, your money, your family. And it's a tricky subject because obviously it's not something that I'm hoping for or waiting for or trying to predict, but it's a risk that I need to care about as an investor and a private lender and also a human. So let's jump right into it. So what if the US collapses? We will first define the stages leading to a collapse and the definition of a collapse. So we'll talk about the rise of the empire, the top of the empire, the decline of the empire, but also very importantly, what you need to watch for to protect yourself, your family, and your money. We will talk about what happens to money, stocks, gold, and more during a collapse, historical restriction during collapses, and the parallels with today. And to build this video, my sources are primarily these three books from Ray Dalio. Principles is a good book as well, but the books used for this video are right here. So The Big Debt Crisis, then The Changing World Order, and then How Countries Go Broke. And between these three books, you have 1,456 pages. So I'll save you a lot of time, so stick to the end. You'll save months of reading, more than 1,000 pages. Don't explain what to actually do if the US collapses. And that's what I'll break down for you. It's very nice to have the whole mechanics of a collapse, the whole implications on how the currencies tend to move, how the governments tend to react, but there's no game plan about what to actually do as a human, as a citizen. So this is what I'll break down for you, okay? This is what you're gonna get out of this video. And before I continue, most people tend to think that you need to be a billionaire or a millionaire to care about those things. It's absolutely false. Absolutely false, okay? Even if all you have is 50K or 100K, that's still all you have. That's still relevant to you. And you'll see that the risks go beyond monetary risks. It goes all the way to physical risk. So it's important that you watch this, even if you think that you don't have enough money to care about this kind of stuff. I promise you, you still need to care. So let's jump right into it. So the rise of an empire, very simply, it generally occurs, I use the word generally with intent here, generally occurs after a country wins a major catastrophic war, like a world war, because nobody will challenge that country for a very long time. And money and resources can go to productive things like education and innovation. War is very costly. So once you win a major war and the whole world realizes that they don't want to mess with you, you get toned down a bit the defense spending. So you get to spend in productive things. So education, innovation, the two most important for any country and even individual and companies as well. So the top, I have two case studies, but there are many, many more. As you can guess, in 1,500 pages, there are a lot of case studies. So the case study of the Dutch, the golden age of the decline. The Dutch golden age led the Dutch to shift their focus to living the good life in a way that weakened their finances. Other powers rose and began to challenge them. The arrival of capitalism, combined with the Enlightenment thinking, sparked the Industrial Revolution centered in Britain, not in Holland. So that was a major shift in power. And the industrial power of a country is very correlated to its ability to win. The US won the previous World War through ability to manufacture massively many objects that it needed for the war. So somebody might make parallels with China today, that they're able to mass produce what they need at a larger scale than the US for many things. The Dutch, who'd been undisputed leaders in innovation, trade, and wealth through the 1600s, lost that position as the center of shifted. A quote that some quotes are definitely inspired from the Ray Dalio books, so don't be surprised. These are the sources for this video. The leadership deteriorated. Philip II and his son III preferred living to governing and used money printing to cover deficits, which is characteristics of so many countries today, and especially US. Which fed inflation and economic pain. Everyone around them behaved the same way. The physical mechanism at the time, instead of a printing press like today, printing money, or at least digitally printing money, they used to dilute coins with cheap base metals, literally debasing the currency by hand. So they would melt, silver with cheaper metals or gold with cheaper metals, and they would fabricate more coins that way. So that was their way of diluting. This pattern started showing up as early as the 1600s. Then the Ming Dynasty in China, the enormity of the Ming dynasty's wealth and power is one possible explanation of what eventually led to its fall. And the reason is they believed that they no longer needed anything from the outside world. The emperors shut down China's exploration programs, closed the country's doors, and retreated into lives of pleasure, handing the actual running of the government to ministers. The closing up the country has parallels today with trade wars. Countries closing each other, hating each other, and trying to reduce dependency to near zero. So we definitely do have parallels since the pandemic. It accelerated in a significant way. That handoff produced exactly what you'd expect: infighting, corruption, weakness, and vulnerability to attack. Big picture pattern across empires at this stage. They increasingly lean on reputation instead of competitiveness to keep funding their deficits. This is something that I hope you see parallels with today with the US. I hope you see the parallels. It's very striking, and this is pretty much a word-by-word exact from Ray Dalio's book. So they spend heavily to maintain the appearance of strength rather than the substance of it. The decline. In the early 1900s, roughly 10, check this out, okay? Roughly 10 of the era's leading countries saw their wealth completely wiped out. And almost nobody looking back over the prior few decades would have seen it coming, because everything about the late 19th century pointed towards optimism. Ray Dalio repeats something in his books, that these collapses of empires are so damaging, not only because of the nature of them, but because not many people can warn you about them. Because they are very rare, so parents are not able to warn you about them, and grandparents can barely warn you about them. So the memories of total collapses tend to be far away and in previous generations. And obviously it doesn't really happen exactly at the same time everywhere on the planet. So people from certain countries may not have had those collapses, but every empire eventually collapsed. People also assumed that World War I must have been obvious in hindsight, but it wasn't. The 50 years before it were the most peaceful stretch between major powers in memory, and also the most innovative, prosperous, with global trade up multiple times over. The US, France, Germany, and Japan were all rising fast, more interconnected than ever. Then it reversed. In the 35 years leading up to 1945, most countries saw the majority of their wealth either destroyed or outright confiscated, and in several cases, capitalists themselves were imprisoned or killed out of public anger when markets and capitalism failed alongside the rest of the world order. So these situations of wealth destructions, of killings, of restrictions are not some sort of one-off, doom and gloom, scenario. You can find many examples, and obviously in the books of Ray Dalio, there are many examples. In 1,500 pages, you can put a lot of stuff, but I have to make it shorter for this video. Traditionally safe investments are not safe during wartime. Capital mobility gets restricted, taxes spike, and normal economic life gets curtailed right when people most need to protect themselves. And this is why preparation is so important, and this is why this video is so important. And you might wonder, how come we're already talking about war in this scenario? And it's because in most cases, when an empire collapses, a lot of people, or when an empire is collapsing, there are a lot of countries and adversaries that will challenge that country at the very same time, because they'll use it as an opportunity. So not in every case, but if I remember well in Ray Dalio's book, 12 out of 16 cases ended in major wars. 12 out of 16 changes of world powers. So it's not a small percentage. So war and empire collapse are in the same story often. So let's look at wartime economic controls with different countries. So the United States, the UK, Germany, and Japan, rationing, all of them do it during wars. Production controls, all of them do it during wars. Price and wage controls, they've all done it. Import and export restrictions, they've all done it. Takeover of the central bank, they've mostly all done it. And when they take over the central bank, they devalue the currency like crazy. And you see a bit lower, then that's the super dangerous thing, because they don't let you exchange your money for anything else. So you can't buy gold with it. You can't ship the money to a different country. So you're stuck in the currency, and then they're about to devalue it to zero because they're collapsing and they're at war at the same time. But wait, I'll talk more about that. Here, the regulations that impact assets. So during the same period. So same countries, market closures, no for the US, but yes for all the others. Asset price controls, yes for everyone. Asset ownership restrictions, super dangerous, but it's yes for everybody. Foreign exchange controls, it's yes for everybody. And here, the top marginal tax rate, look how high taxes go when the country is collapsing. So not only you're stuck with the currency, not only your salary might be capped, not only inflation is going crazy and the printing is going crazy, but also whatever you make is taxed so high that you're poor instantly. Whatever you are holding, whatever you are doing, you're poor instantly. So, but there are ways to mitigate those risks. So I'll get to them. And limits on corporate profits. So even, another lever of torture is that companies that would somehow benefit massively from the country collapsing will have to hand over their profits to the government, or most of those profits. And that's yes for all of them. Periods of wealth confiscation. So, and you can see the periods of time. So the countries, we have a bit more countries. We have Russia, Italy that were added, China that was added. So yes for most of them, except China here and Japan. And then no for most of them, except Japan, Russia, and China, where wealth was confiscated. In these periods of time, when you look further back, you do get more cases. But these are the recent history cases. Periods of strict and rising capital controls. So we had capital controls for almost every country in almost every period. And capital controls are what I just said a few minutes ago. You can't transfer money out of the country. You can't convert your money into gold or certain assets. You can't do many types of transactions. So you can't just buy gold. There are historical examples, where the army will actually go and seize your gold and give you the currency that you don't want in exchange. And you've had an historical example in the US of that, but in other countries as well. Many examples of that if you do a quick search, many. So the toolkit the governments reach for. So like I said, when the empire is declining, they have to manage, a crazy debt. And they, as we've seen in the tables, they will increase taxes to crazy levels, foreign exchange controls, to try to stop assets from leaving the country. So if you react when the country is already collapsing, it'll be too late. You won't be able to do much. You're lucky if you're able to leave the country in a quick way. Certain countries already today, in Europe, for example, have restrictions that are creeping up about rules regarding who can leave the country and for how long. So that's a bad sign. Of course, Europe is currently busy with the war, the Ukraine and Russia war. So that may explain part of that trend. They will also reevaluate or otherwise manage government-held assets, but also government bonds. So if you were holding government bonds, they will pay you back, but you're not going to be happy with the value of the currency that they're going to pay you back with. So that causes people to dump government bonds, to dump the debt, which pushes interest rates even higher. And the government is so in debt already that if you push interest rates higher, then it's even harder to pay back the debt. And then it just spirals like crazy, and then they have to print, and you devalue to zero, basically. And creating new forms of money, like we said, certain examples about devaluing coins, but also just money printing. And eventually, when the currency collapses, the way to repair it is to basically abandon it and come up with a new currency that is backed by something, by gold, by real estate, by land, a hard asset, so that people start trusting it again. And then you restart the cycle. Then you eventually break that link and it becomes fiat money, soft money, and then again into hyper hyperprinting, hyperinflation. So here's just a stat. I've already said it to you, the 12 out of 16 cases. So over the past 500 years, when two nearly equal powers hit differences, it led to actual military conflict in 12 out of 16 cases. And a major military buildups preceded war 80 to 90% of the time. So the percentages are not low. Of course, it's over 500 years. So like I said, it doesn't happen often. It's generally not your neighbor that is going to warn you about what he remembers from the previous, collapse in a different country. You'll usually, it's going to be history and people studying history. And that debt cycle of having a hard currency, then breaking up the link, and then it becomes a fiat currency, and then it scales forever printing, and then you accumulate debt forever until it breaks. It's not new. It's not a new concept. It's always been like that. These buildups, then write-off debt cycles have existed for thousands of years. Some societies even institutionalize them. The Old Testament describes a jubilee year every 50 years where debts were simply forgiven. Knowing the cycle was coming on a schedule let people actually plan for it. The difference with today is that you don't have a fixed schedule. It breaks at some point, but you're not going to know when. And you're not going to time it to the exact month or even the exact year. So the only thing you can do is what I'll explain a bit further down in the video. Structure yourself in a certain way, and then whatever happens, you're not going to get totally wiped out. You may lose money in a certain country, but you're not going to get wiped out. And austerity, to try to fix the debt problem, has essentially never worked once debt problems get large. Every government that's tried sustained austerity has eventually abandoned it because the pain of the falling employment, the severe contraction in the economy becomes so painful and becomes self-reinforcing on the way down. So the debt bubble just gets worse, and you need more debt to fix the pain and so on. The consistent end result across nearly every major deleveraging studied is big waves of money printing, fiscal deficits, and currency devaluation against gold, commodities, and stocks. So this is sort of the summarized pattern. And a case study about Germany. So as growth weakened, a lot of credit creation and borrowing stops contributing to real output. People instead buy gold, factories, imports, and literally rocks. There's an example in Ray Dalio's book that is very striking, is that the unemployment rate was so high and money was so worthless that people had nothing to do, and they were so poor that they would just walk around in the streets and collect rocks on the ground just so they could hold on to something and that maybe it has value to someone, or they could trade that for something. So just to hold to something that isn't cash. Then capital goods like machinery and tools get bought, not because they're needed, but purely as a store of value. This creates a feedback loop. Inflation and currency decline feed on themselves until people lose faith in the money. Long strings of zeros make the currency useless as a unit of account. Producers stop accepting it, demanding foreign currency or a barter instead, which chokes off supply and collapses demand simultaneously. Once hyperinflation fully sets in, it doesn't just erode savings, it wipes out financial wealth entirely and triggers massive chaotic wealth redistribution. Like I was saying, whatever you're holding or whatever you're doing at the time, you get taxed at super high rates, you can't convert your currency to anything else, and inflation goes crazy. So your real worth is nothing. You could be a trillionaire and it's gonna be worth nothing. In certain cases of hyperinflation, you could take the entire mass of money of an entire country and you'd only be able to buy a piece of bread. So it's, the final nail in a coffin, in the coffin of an empire is not a tightening cycle. It's a stimulus cycle that just doesn't work at all, that you just print it to infinity for nothing. Nobody wants your currency. That's the final blow. Lenders lose as their claims inflate away, and debtors win on paper. So if you're a lender like me, for example, if I lend $1 million to somebody and then the currency gets into hyperinflation and people give me back $1 million plus interest, Maybe the real wealth of what they gave me back is maybe $10,000. And the person who borrowed the money looks like they won on paper, but then whatever they were holding or whatever they gained from it is also worth nothing. So, you know, it's the whole thing produces serious social tension, even civil wars in many cases. Disorder got bad enough that the government had to declare a state of siege and handing the military expanded power to make arrests and break up demonstrations. And also the example of collecting gold from people, going to homes or going into bank deposits and taking the gold. And just some sort of other aspect that is striking as well about handing the power to the military or to the police force is that in those cases, sometimes the police will refuse to work because the currency with which they are being paid is worth nothing. So they refuse to put their lives at risk to go into protests and fight people and arrest people and maybe receive a break on the head for a currency that is worth nothing to them. So that's another trouble of these kinds of times. A large part of the deleveraging process is simply people discovering that what they thought was wealth was actually just promises to be paid, promises that don't get kept. When investors try to convert those promises into real money, that's when you see the classic bank run and sell-off panic. One good way to visualize that is that you can have infinite paper wealth, basically. Everybody in the US could be trillionaires, but only digitally. If they were to try to buy $1 trillion of goods and services, everybody at the same time, then you realize that inflation will go so crazy that the $1 trillion of spending power that you thought you had was maybe actually $1 million. So that's a good way to visualize, you know, paper wealth versus real aspects around spending on goods and services. Different reserve currencies versus gold. So now we're starting to get into what to do. As you can see, they all tend to go to zero versus gold. It's a very straightforward chart. You know, you got the Dutch currency, the British pound, the US dollar. They all trend to zero just because of the infinite printing. And when you get an actual collapse, one question I sometimes get is, okay, well, you know, why don't you just, you know, buy the dip? Or I guess I hope that at this stage of the video, you know why it's not just a solution to buy the dip. People ask me, you know, how long does it take to get back to normal? Many previous powers that used to be the #1 empire, for example, Spain, Portugal, the UK, it's not like it's a desert now. It's still a country, there's still economic activity, you can still get rich in those countries today, but for some period of time in history, it was the worst time to be in the worst place to be. As you can see, once you get a collapse, the length of equity drawdown in months, the average is 119 months. So you get something like 10 years, okay? And the range of all the different cases, this is again, sources from Ray Dalio's book. I didn't make this up. The range is 60 months to 249 months for severe cases. So you have like 20 years. And the length of the GDP drawdown in months, 72 here, and the range from 25 to 106. And the change in debt to GDP post-stimulation, here a 54% decline as an average, and the range from 70% to 29% decline. So that's roughly 10 years for real economic activity, GDP. A real economic activity, when you hear that in economic sense, it means net of inflation. Because if your economy is growing at 10% per year, but it's 11% just inflation, then you're actually contracting by 1% in real terms. So real economic activity to get back to its old peak and closer to a full decade for stock prices, hence the term lost decade. So if you were there for that lost decade, you basically got wiped out and maybe drafted for a war. So it's just, you know, a terrible, terrible time. You know, when you think about these kinds of scenarios, you realize that, you know, most people's problems don't really matter or not really significant when you compare it to getting your entire wealth wiped out and then getting drafted to go fight a war. Some people live that today in certain countries that are at war currently. Think of that, you know, when you feel like you have a hard day, it can get a lot worse. And it can also get a lot better. You know, it goes both ways. And the reason why it takes stocks even longer than the GDP, it's simply because it takes time for people to feel safe again, holding risk, you know, betting in the stock market. They will wait until their own situation gets better. You know, if you're jobless, you're broke, and, you know, you almost got drafted for a war or there's a draft going on, you're generally not gonna be buying the stock market, or you don't have the money to buy the stock market, and nobody is gonna lend you money to buy the stock market. You're not gonna have any sort of margin. It's not gonna work. You know, at these times, credit is not available easily. So they need their own situation to improve with the GDP. You know, the GDP grows, and then you get a job, and then you have a certain level of savings, and it takes years. So that's why it takes so long. So what to actually do? Every example in the first part of this video shared one pattern. The first move, and the main moves, was always against the empire's own citizens' access to their own money. So rationing, price controls, capital controls, wealth confiscation, you know, freezing accounts and so on. And you can't predict a collapse in advance. That's really important. Some people ask me sometimes for like some sort of deadline. I mean, I would be so much richer than I am today if I could answer this question with a high level of confidence. And I have certain ideas, but you don't, push around those estimates publicly. I do talk about it sometimes in the research center, my Telegram group, but it's not something that I'll just make predictions, online about that. Nobody called 1914, nobody called Weimar. So the goal isn't prediction. It's structural protection, and it's prevention. Your money, identity, and mobility should never depend on one country's decision. And if you've been following the headlines in the past 2 years, I won't give you many examples, but you've seen many countries do pretty much atrocious things to their own citizens, and they're not even in a war time. So the goal is prevention. It's not about, hey, Louis, can you tell me an exact date? No, it's not an exact date. It's a structure, and then you apply the structure, and then when it happens, it happens. Okay, so the pillar number one, and this could save your life, is more than one passport. One passport means that one government decides if you can leave and what gets frozen. It ties back to capital controls and wartime restrictions, like leaving the country, or even just traveling. If, for example, the empire collapses and there's a war at the same time, and they want to draft people, and then you are abroad and you don't want to go back, and then they tell you that they're going to cancel your passport, what can you do? You can't travel anymore. You can, hide and seek and stuff like that, but you're going to have trouble traveling to relevant places without the passport. And you don't need an empire collapse to get a second passport or a third passport. It's really a great perk to have. There are many ways to get it. Some ways are super easy. Maybe you were born in a different country than the USA or Canada. You have dual citizenship. You can get a passport that way. This is my case. I have my second passport is from Bulgaria. So I have a Canadian and Bulgarian passport, and I'm working on another one. So I'll just keep accumulating them basically. So I have a dual citizenship with Bulgaria. I was born in Bulgaria. But even if you were not born in another country and you have just a single passport and that's the country where you reside, you can, certain countries allow you citizenship by descent, naturalization, investment-based programs, or just flat out, buying the passport. There are passports that you can buy for a little less than 100K, and then it goes higher from there. And I know that, if your net worth is like 50K, it gets very difficult to buy a passport, but maybe you're eligible for other ways, like dual citizenship or by descent. And you should really explore that. It's very easy to do, and a passport is relatively easy to get, and it's cheap. It's just a no excuse pillar. The pillar number one is really a no excuse thing. If you really have no avenues other than buying it, then you get a better excuse to just wait and then buy it very quickly if you think you're really in a dangerous situation. But if you have no other choice than to wait, then you can wait for that. Pillar number two, multiple bank accounts in non-aligned jurisdictions. If you tell me you have, for example, a French and Spanish passport, if Europe goes down, it's basically the same passport. Okay, so they could collaborate to just cancel those two passports. So you need non-aligned jurisdictions for passports and for bank accounts. So of course, if you have no choice to have a second passport or third passport, get any passport you can, basically. But just be aware that if they are passports from very similar countries, it's the same thing. You don't get much of a hedge. However, it's also important to make people realize that when there's a big collapse, an empire collapse, many alliances just don't hold anymore. Just from the next morning, they don't hold anymore. So you have some protection to that level where countries will shield themselves as much as possible to contain, collateral damage, and they will, abandon the loser very quickly. So it doesn't necessarily mean that if a country is allied with another, even if it was for 50 years, that this will hold in a collapse. It could easily break the same day. Okay, it can easily break the same day. So 3 accounts at a domestic bank does nothing, obviously. They all move together under the same government in a crisis. What matters is different legal and political systems, ideally not close allies, as I said, and you don't need, that's a very good point. People tend to mix residency, citizenship, non-residency, bank accounts, all that stuff all together. But all of these things are very distinct things. And it's very important to know that you don't need to live somewhere or be a citizen to bank there. Many countries allow non-resident accounts. So you could go to a country, plan your thing in advance, of course, because they're going to ask you for documents. But if you know in advance that you're going to go in a certain country that you judge to be stable and non-aligned to the main economic blocks, you could open a non-resident bank account. And you may have higher bank fees, instead of $5 per month, it's like $20 per month, or have a high minimum balance or higher than, a usual bank account. You would have, for example, a $10,000 USD minimum deposit for the account to stay open. It's not just to avoid the banking fee. You'll most likely pay the banking fee still, but just for them to entertain your account. Often they will ask non-residents to have a base deposit. So you need to take that into account. But you could technically open non-resident bank accounts in many countries. And that way develop residences, the legal term of residence, in certain countries, but have non-resident bank accounts in a bunch of countries. And then you can spread out your money. And if and when there's a collapse, if certain accounts get impacted at a point where you can't save it, then at least you're not totally affected. You lose a portion of what you have, but you maintain the rest, and you maybe even make money on the collapse, depending on how you're positioned. I won't talk about, trades or how to specifically position, hedges and stuff like that. That is beyond the scope of this video. I'm giving you the framework. Of course, I gatekeep certain things for the research center, but I gatekeep barely the top, 15% most important things. But all the rest, the 85%, you have it here. So your job is infinitely easier now. So this is a really, 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 really important thing that many people just don't know. But once you explain it to them, it's very obvious. Then you have to diversify what money actually is. Because if you hold US dollars, for example, in 5 different countries, it's still dollars. They're still subject to restrictions and they're still subject to devaluation. So if the currency itself is declining, that's not protection. You need multiple currencies, not just your home currency or the US currency. You need digital, but also a real allocation to gold. And obviously, don't hold your gold physically in a country that is collapsing or that you think is going to collapse, because they will take it. So if you store that abroad or spread it out, or stick to digital trades for gold. You can just buy gold digitally, or Bitcoin if you think that's better for you. And gold just historically held value through every collapse covered. People in panic tend to jump to gold versus Bitcoin in recent history. In the past 2 years, it's been the case where in moments of true panic, not even extreme panic, moments of panic, gold added trillions and trillions and trillions and trillions of dollars of market cap, whereas Bitcoin was declining. It's not a guarantee or a prediction of future performance that I'm making, but I do think there's some sort of social aspect and human aspect that if you put yourself in the shoes of a dad or a couple, that they think they're gonna lose everything and that the country is going into extreme stress and they are panicking, and then you ask them, would you like to buy gold or would you like to buy Bitcoin? And just, I'm not going to answer that question for you, but just ask yourself what your neighbor would do in a moment of true panic. Would they buy gold? Would they buy Bitcoin? Maybe the best answer is it depends, and I'm not making a prediction here. I'm just saying observations about the past 2 years, how it played out. But maybe the combination of multiple things might turn out as the best thing. But like I said, I won't detail exact positions that I take or that I would take. This is beyond the scope of this video, and this stuff is more exclusive to the research center. You also need currency hedged positions, through things like derivatives, but in foreign accounts. Because not only you need bank accounts, you need brokerage accounts in foreign countries. So that way you can still trade and not get your trades closed off. Your trades can get closed if that's what the government wants. So it becomes very difficult for one government to impose 12 different other governments. Hey, close the account of that guy. Hey, close the position of that guy. Especially when that one country is collapsing. They probably won't listen. And many, they already don't really listen or want to be told what to do. So imagine if the number one empire collapses and then that same empire tries to give orders to different countries, it's going to get really difficult. Many countries will just flat out ignore, even to this day, European countries are really trying to fight it out with Trump about many different things. So you get some sort of preview maybe. So like I said, a brokerage presence outside of your home country too, not just banking. Markets were closed, frozen domestically in several of our examples, while still functioning in other countries. So to close this video, every tool a declining empire has ever used works by trapping people inside of their system. So the prevention is to not be inside of a single system. You need multiple passports. Like I said, it's much easier than you think to get them. Multiple bank accounts. Again, you do not need to be a resident or a citizen to open those bank accounts. And you need those bank accounts and brokerage accounts and so on in jurisdictions that don't move together. If you have no choice, then it's better to have them in countries that move together rather than having nothing or having it just in one place. And you need multiple currencies, combination of hard assets. You can have gold or you can have real estate somewhere. And that's the model that these 1,500 pages don't describe, of how to adapt it. But they describe the pattern of an empire getting ahead of itself and eventually not being competitive anymore and collapsing. The education is the first metric that leads everything else. All the innovation and military capabilities, they all start with the leading indicator of education. Once education peaks in an empire, everything else ends up peaking later on. And the final thing to peak is the reserve currency. So that's why just looking at the currency is not good enough of a signal. You could say, oh, well, like the US dollar is fine or this other currency is fine. But if you don't care about the other indicators, then you get taken by surprise, a little bit. If you wait for the reserve currency to shift, then it's definitely too late. So that pattern, what's important to remember, it's not a one-off freak show that happened 500 years ago. It's something that happens continuously throughout history, but just not quickly enough that everybody pays attention or that people can warn you about it. It's not something that happens every 20 years. You can learn from, smaller countries in the world that go through crises, and that you can learn the mechanics and get a feel for how it could look like, but it's not something that you'll usually get warned about. So these pages describe that pattern over and over again with many case studies. But now you have a checklist of things to do to shield yourself. So you have 85% of how to fix this. Certain trades and certain specific things really depend on what happens, when it happens, and the events leading to it. So even if I wanted to give you specific trades right now, apart from obvious things like gold, it would be inaccurate for me to do so. It's more something that you plan closer to actual events. You should definitely plan certain things right away today, and that's what we do in the research center. But it wouldn't be accurate for me to tell you, okay, you're gonna open this trade, this trade, this trade, this trade, and then you're gonna do this and that, and then you're gonna be fine. It wouldn't be an accurate thing to do, especially in a static YouTube video. If you want more and you want to follow these things and you care about that and it's important to you, you have a lot of money at risk, you're concerned about things, join us in the research center, and everybody's aware of that, of those topics. We literally had a private event recently and with everybody in person, and half of the discussion was around that. So some people don't care, some people think it never happens. And to me, I don't want to see a major destruction, I don't want to see a major war, but am I gonna just have all this information and just ignore it and not even hedge myself and not even have a solution? What am I gonna do? What are you gonna do? You're just gonna stay there and watch it happen to you, watch it happen to your family without any sort of plan or alternative structure? That's not the way to go. So if you want more, you can check the links in the description. That is all for this video. I'll see you next time. Thank you and stay safe.